I'm John Taylor, founder of Stanton Park Capital, and also wanted to share with you the Capital Market Insights newsletter for July of 2023. So in this we cover consumer, industrial, as well as technology, media, and healthcare life sciences sectors. So we're going to talk about recent notable transactions as well as public company activity among the 120 largest companies in these four sectors. So here, starting off, going to the first page here. So our Capital Market Insights Index is currently trading at about 4.5 times EBITDA, 3.9 times revenue. So again, these are the 32 plus largest publicly traded businesses in the consumer, industrial, healthcare, life sciences, and technology media sectors. So this is sort of the average trading multiples for these businesses. Also, just wanted to highlight, although capital market activity and M&A transactions are down significantly from last year due to, among other factors, higher interest rates, a somewhat slower economy, kind of less competitive deal market. There's still a lot of transaction activity happening across all these sectors, right? There's a lot of private equity capital available. There's a number of strategic acquirers out there that are doing deals still. So there continues to be a lot of activity. So highlighting some of these in just the last month or so, Bang Energy, a producer of sports nutrition drinks, was acquired by Monster Beverage for $362 million. Aptio, a developer of software for IT businesses, was acquired by IBM for $4.6 billion. Amedisys, a home healthcare services business, was bought by United Health for $3.25 billion, which is about 1.5 times revenue or 13.5 times EBITDA. Nutrinovo Netherlands, a manufacturer and retailer of functional food ingredients, was bought by Mitsui & Company for $472 million just a couple weeks back. Compass Data Centers, a data center designer that supports enterprise, SaaS, and cloud computing, was acquired by Brookfield Industrial Partners for $5.5 billion. Dice Therapeutics, oral therapeutic candidate for treat diseases in immunology, was acquired by Eli Lilly for $1.84 billion. Building Products Canada, manufacturer residential roofing shingles and wood fiber insulation panels, was acquired by Saint-Gobain for $981 million, which is about 11.5 times EBITDA. Chinook Therapeutics, a clinical stage biotech company for rare, severe chronic kidney disorders, was acquired by Novartis for $2.85 billion just about a month ago. And then finally, another notable transaction, Circor International, a manufacturer of aerospace, defense, and industrial products, was acquired by KKR for $1.55 billion, which is about 2 times revenue or 10.2 times EBITDA just about a month ago. So these are some of the larger, more notable transactions. As I said, there's still significant M&A activity, although M&A activity is down somewhat from the prior year. But also wanted to just look at each of these sectors in a little bit more detail and what's going on, particularly with the publicly traded businesses. So if we look at first the consumer sector, so this is Amazon, Tesla, LVMH, Walmart, Procter & Gamble, Nestle, Home Depot, Coca-Cola, L'Oreal, etc. So the 32 plus largest consumer sector businesses. Currently, they are trading, if we're looking at on an enterprise value to EBITDA basis, about 3.6 times revenue or 17 times EBITDA. Trailing 12 revenue growth is about 9.9%. And then year-to-date stock price performance about 10.3%. So moving on to the industrial and B2B sector, these businesses currently trading at about 14.5 times EBITDA or 2.5 times revenue. Year-to-date stock performance about 13.4%, and then trailing 12 revenue growth is about 10.6%. So the industrial B2B sector, and again, these are the 32 plus largest publicly traded industrial B2B businesses. So obviously UPS, Raytheon, Honeywell, Caterpillar. So these are all big, capital equipment type businesses, as well as a number of other industries captured here. But Siemens, Boeing, John Deere, General Electric, Lockheed Martin, Airbus, LG, etc. 10.6% revenue growth over the trailing 12 months. Let's see, moving on to technology media sector. So again, the 32 largest publicly traded tech and media sector businesses, starting here, right? Apple, Microsoft, Alphabet, which is formerly known as Google, NVIDIA, Meta Platforms, formerly known as Facebook, Taiwan Semiconductor, Tencent Holdings, Samsung Electronics, Broadcom, Oracle, ASML, a big player in the semiconductor market, Adobe. So again, a lot of software as well as tech hardware businesses. So these companies are currently trading about five times revenue or 15 times EBITDA. Year-to-date stock price performance has been the highest of all sectors, approximately 28% stock price gains on average among these companies, and then trailing 12 revenue growth is 6.7% approximately. And then moving on finally to healthcare life sciences sector, the 32 or 33 largest publicly traded healthcare life sciences businesses. So on average, they're trading at about 14.8 times EBITDA or 4.5 times revenue. Median year-to-date stock price performance is negative compared to the others, 1.2% on average negative stock price performance year-to-date here through the first week of July. Year-to-date, trailing 12 revenue growth, 2.9%. So healthcare life sciences has the slowest revenue growth trailing 12 months, but obviously this is a very large sector, high multiples being paid. Stock price performance has been lagging, but it's interesting to note some of the largest transactions the last month or so have been in healthcare life sciences. So maybe it's some of the larger healthcare life sciences players are acquiring, particularly companies in the biotech and pharma arena, buying early clinical stage businesses that have drugs and therapeutics that have shown good promise, and they're paying very, very significant prices for those businesses. So hopefully you found this interesting. Feel free to reach out to us if you'd like for a consultation. I will post this in the link below. Feel free to, as well as some more information about us, Stanton Park Capital, investment bankers for middle market businesses. We hope to hear from you soon. Thanks.